Good morning. This is the Zero DTE market analysis. We do this every morning, usually somewhere between 7:15 and 7:45 a.m. Eastern Time, where we look at three different factors that set up our out-of-the-money asymmetrical butterfly trades, where we're looking to capture premium. It's also a directional trade, and where we make adjustments for volatility to adjust for the rate of decay of premium, and that optimizes our volatility of returns and maximizes our return on capital that we put to work. It's a very efficient way of trading. It is completely probabilistic, objective. We also use volume profile to examine market structure so that we can determine the optimal place or level and timing in the morning to put on that trade. So that's that's our strategy in a nutshell. It's relatively simple. Of course, like every simple little thing, there are nuances and there's complexity and there's incredible depth. And and we talk about that at great detail in our new school academy, where you can learn how to trade this way. This is absolutely a professional way to trade. I teach people every day in my coaching service how to become consistently profitable, how to become independent, and how to trade at a pro level. I am a former institutional trader and fund manager. I've been doing this for well over 30 years. Before that, I was actually an IT professional in the area of financial technology. And when I was back in the .com era, my teams literally built out Wall Street. So I have a good perspective of the industry, both from literally behind the wall and in front of the wall. So anyways, today we're going to focus on a trade that doesn't come up too often in low volatility times like we have now. However, there are certain days when there's enough anxiety in the market, I guess you could call it, where IV has elevated enough that makes this trade playable. And today is just one of those days. We also use this trade as a way of gauging implied volatility for the day. But when it gets to a certain price, we're compelled to take that trade, and that's called the big ass fly, which is a 50 wide at the money butterfly using either the ES or the SPX. The ES is probably going to be available to most people since it trades outside of market hours. The event that there are two actual events that we're trying to capture with the big ass fly, and both of them involve the change in volatility, or what we call the volatility crush. The first would be when after economic reports in the morning are released, there's typically a crush in volatility and an immediate rapid decay of premium, which means that the value of our butterfly will increase very rapidly. And so it's an opportunity to capture a quick 2, 3, 4 points. And the second is if price stays within the body of our fly, the profit tent, there's another opportunity that typically happens later in the day. Now, today is a special day, and we might even look at putting on a second big ass fly. We'll see what the conditions are, or just keep this one on throughout the day. But the second opportunity is usually after the morning session is over, when volatility has reached its peak and starts waning off, and we get a second volatility crush event, and because of that, then the premium decay rate increases even more, causing the value of our butterfly to increase even faster. So it's really an exciting trade. Now, we don't always bring it all the way into after the morning session. Now, if you'd like to learn more about the big ass fly and the way to trade zero DTE events, produce incredible low risk, high potential profit trades every day, and keep your volatility and your drawdown super low so you're never worried about losing. In fact, I like to say that part of our practice is discovering how to become the best possible loser. And I guess according to a very famous trader, Tom Hogard, he has a book that says the best loser wins. And we, in fact, do practice that philosophy, because as long as you're not losing, you're winning. Anyways, enough of that. Let me just say one more time, the school community is where you can learn about all this stuff. Go down below. It's a remarkable resource. This is sort of like the pre-announcement. At the beginning of the year, we're going to have our official launch. It includes the entire course and trader's manual and strategy and process and methods, as well as live events, archives to hundreds and hundreds of videos, other types of classrooms that are in there for teaching you mental toughness. And it's really just a remarkable resource for only $35 a month. Go down below, the link is there. Anyways, the official launch is actually in the 1st of January, or the beginning part of January, and then we'll start adding the live events in there. So it's really a remarkable resource. I think you'll love it, and you'll learn literally how to do what a professional trader does. All right, so what we're here for. What we're here for today is Fed Day. Today, December 18th, is Fed Day, meaning that at 2 o'clock, the FOMC is going to release their report on rate cuts. And as I reported yesterday, and looking at the Fed Watch tool, there is about a 97, probably a 99% chance today that they are going to cut interest rates, short-term rates, by 25 basis points. Virtually no chance that they're not going to do that. And so that will happen at 2 o'clock. Now, that's big news, and everyone's expecting it to happen. But what is more important is the narrative that comes along with that rate cut, and then the presser, when Jerome Powell gets up in front of the press and starts taking a Q&A and starts putting his own unique spin on what that narrative is. And then also the questions that come to him that might force his hand a little bit in the way he expresses that narrative. And of course, the entire market is going to be sitting on the edge of their seat, waiting to see what he says, because all they really care about is what's the future cost of money. And that's what it's all about. Now, this represents a big opportunity for us in 0 DTE. But, we don't look at it as anything monumental or anything. It's just another day, just that we have extra volatility, which aids the probability that we can get a larger trade in. But in terms of overall activity and what we do, it's pretty much just another day. However, like I said, opportunities there, and so we adjust for it and open ourselves up to it. So essentially, we're kind of like an anti-fragile type of system and strategy. What that means is that when there's disorder in the market, our strategy and our confidence grows, and we expand our exposure to that extra opportunity or extra vitality or volatility, and we run into the fire because it's actually less risky to do it that way, the way our strategy is built. It's anti-fragile. It gains from disorder. So on to, let's look at the major things that we're looking at for a normal trade. We may actually have a chance for 2 out-of-the-money trades today, one in the morning, and it may produce some results early on and possibly go right into the Fed event at 2 o'clock. But I found that sometimes on a day like today, you actually get to put on 2 trades. One in the morning, you take it off, and then another one right before the event. And that's the only unusual thing about today, in that normally we put on our trades during what we perceive as the most opportune time, and that is in the morning between the open and 12:30. But today, because volatility will likely heighten and rise right into the event at 2 o'clock, it often gives us a second opportunity to put on another trade right before the rates are released and the reports are released. So that's the only real difference on a day like today. But let's take a look at the overall general landscape, because volatility, from a big point of view, what we call the volatility regime, is still quite low. And I'm going to go over to that now. So here's the VIX, and we can see that although volatility has been rising slowly, it's still well under our line of demarcation at a VIX of 17, and we're squarely inside of what we call zombie land, but we're at 15.3. And really what we're saying, this level of volatility will dictate the range of butterflies that we're willing to trade, and that's right-sized for that rate of premium decay. And so we're 10 to 20. We might be leaning towards the 20 side today, maybe even a little bit higher because of the addition of the FOMC and all that extra volatility that's coming into the market. So that's where we're at there. We also want to look at the big ass fly because that will give us an idea of whether we should be on the low side or the high side of that range of widths. So here on the left-hand side is our classic out of the money fly with guide range each morning that we look at based on the volatility. And then the big ass fly, depending on what the cost of the debit is, will tell us whether we should be favoring narrower flies or wider flies, right? So let's now take a look at that big ass fly. And so the easiest way to do it for most people is to put on an E-mini S&P futures fly. Now you have to be very careful that you're not putting on the continuous contract or specifying it up here in the symbol. And the reason for that is the platform underneath has already taken continuous contracts and rolled them to the March contract. So you'll get very different pricing. So you have to be very cognizant of that. Make sure that you put on the proper symbol, which is the December contract. And we trade the December contract today and tomorrow. And then on Friday, that will be the very last day. It'll actually have an AM expiration for the December contract. We won't trade that on Friday. We will then switch to the March 2025 contract. But for today, you have to be super careful and make sure that you're specifying the right contract, because there are no 0 DTE contracts that expire today for March, only for December. And the last two opportunities are today, December 18th, and tomorrow, December 19th. You could make an argument that December 20th is also the very last day, but it's not a PM expiration. It means that it will expire at 9:30 before the market actually opens. So if you're not aware of that, you could get caught with your pants down, and you don't want that in trading. Absolutely. All right, so getting onto the big ass fly, that is simply a at the money 50 wide fly on the ES or the SPX if you have a platform that can trade the SPX. I do. I use Fidelity Active Trader Pro, and so I've already put on a trade for this. But we can see clearly that the debit here is well below 25, and that's 25 is our filter. Now, if you remember yesterday, it was at like 35. And in fact, all this past week, it's been in the 30s. And so now that implied volatility, that heightened volatility in the morning because of the rate hike has accelerated the premium decay for today's contract. And that has the effect of lifting the butterfly up so that the debit is much less and the profit potential is much greater. It also helps us in terms of gamma risk or sensitivity to price movement, as the premium or the P&L curve is now much flatter. So it's much lower gamma, much easier. So more profit potential, less risk as far as price movement goes. Everything about it is better. And so I recommend putting that trade on and holding that, and hopefully throughout this morning we'll get a nice big move up, and it's an opportunity to make a nice trade. And so you can do the same thing with the SPX, but you have to make sure that you understand the difference in pricing between the E-mini and the S&P. Now that should be very close right now because the futures contract now is reaching parity with the index because it's right at the end of its life. So their pricing shouldn't be much different than maybe $1 tops. So they should essentially be the same strike and everything. So this morning, it looks like a 50 wide fly centered at 60.70. And you could probably put that on for 2025 on the ES. All right. And if we go back to, am I not showing this? Let's see. I don't think I am actually showing it. Here it is. There it is. All right. the ESC up here in the symbol, ESZ24, centered right at the market, and currently only costs $20.20, $20.20 or $20.50. It looks like it's fluctuating there. Excellent risk to reward, excellent gamma risk or sensitivity to price, everything about that trade. And later in the morning, when the market opens, you should see this move up very rapidly, and then your break-evens will move out very, very quickly. Now, on this trade, we set about a $3.50 stop, right? Very rarely do we hit it. In fact, I think I've only hit it once in the last 15 trades, something like that. And that implies that all the other trades were profitable, and some of them quite profitable. But overall, I'd say that our win rate on this is in the 80s, 85%, with a remarkable return on capital. So it's an unusual trade in that it gives you both high probability and high return on capital. And that is because we filter out only the best trades. If you take this under all circumstances, you're not going to have that kind of win rate. If you take this trade with a debit of over 25, you're going to be a big fat loser. Follow the rules, follow the stops, and you'll do very, very well with this trade. All right. So our next step in our morning analysis, so we know where the VIX is, we know what width we want to know the direction. That hasn't really changed a whole lot. So let's take a look at that under Trading View and our moving average. We can see that it is still down. Both the moving average slope is down and it's below the moving average. So we're looking at putting on a put fly out of the money, like we've been doing all along this week. So if you did that, 1, 2, 3, 4, 5, 6. So we've been right 4 out of 6 days. And even on these days where it did move up, there was opportunity, like yesterday, an opportunity to make a profit on a put fly. So in fact, we were right 5 out of 6 days. So today we're also, or I'm sorry, no, that's not true. I think it was kind of a flat day that day. But in any event, let's see, 1, 2, 3, 4, 5, 6, 7. So we were right 5 out of 7 days. So we're looking for a downward move. Overall, I still believe that the market's going to go up very soon. We're entering this sort of consolidation phase, and we might get a little dip, but I think it's going to continue higher. And, of course, Tesla reached another new all-time high yesterday. It closed at $479.86. Unbelievable. I expect that to go much, much higher. So that's also another trade that we trade with the 0 DTE, but it's only a 1 day a week weekly option. But there you go for Tesla. Now let's take a look at the market structure. It's already all marked up. Tomorrow I'll do a special on calculating and marking up the market structure using the volume profile, so you'll see exactly how we do that. That is also another thing that you'll learn in great detail in the school environment, so don't forget about that. And you can see very clearly how the market structure is providing support and resistance, and we use that to figure out where our entry events will be. And because, now see, here's the trade yesterday. It came right up to this structural element, came down, actually came up for a second time and came down again. So there were actually 2 opportunities to make profit in yesterday. So that's kind of interesting. That doesn't happen too often. So we're waiting for it to come up into one of these levels and then move down. When it hits one of these levels and we get confirmation that it's provided sufficient resistance, then we take the trade and put an out of the money put fly below the market. So that's it. That's just about everything. So now we know how big we are, what direction we're going in, and exactly the level that we're looking for an entry event. And plus we have that secondary trade, the big ass fly. So today could be a very, very profitable day. So let's bring it back to the big head. I want to thank you all very much. I'm looking forward to today. Today's going to be a great day, and the rest of the week. And then, of course, next week is going to be fantastic for a lot of people as it's Christmas vacation and a very shortened trading week. Don't forget about the school environment. Get in early access right now. You're going to really love that environment. I mean, it's just one of the best. We had another sort of lead-in product to our coaching program that we called the Blueprint, but this school environment is just a new version of that and expands it, has a community. You're going to love it, and it's the price is right for everybody. All right, there you go. Thank you very much, and we'll see you next time.